Alright guys, so since we have already done general journal, specific journal and ledger, now it's time to move on to trial balance. I will not be doing trial balance since I have already done it. So I am challenging you to close all these accounts and make the trial balance, and let me know down in the comment section if your trial balance balances or not. Okay, I will be teaching in this video how we will be closing the accounts and how the accounts can be differentiated, whether they will be following under the category of income statement or balance sheet. Okay, so before we move on into income statement, we have to understand that how the accounts are classified in ledger, and then only we can close them accordingly or according to income statement or balance sheet. So if we look on our ledger from the previous video which we already created, okay, so these are general journal. So until here I won't be looking them, just create a line over here. So I think we can identify that these upside all are journals and downside is ledgers. Okay, so basically cash book is a balance sheet item, so we have to understand if we are looking into if we are looking into income statement, then the things that are classified into income statement are revenue and expense, or I can say revenue minus expense, and then I can say that that is equal to profit. Okay, however in the balance sheet we will be following the simple statement or the equation we studied in the beginning, and that is, okay, so let me do like that. All right, so assets are equal to liabilities and capital plus capital, and capital also does make sense, but that's fine. Okay, so these are the items included in the income statement, and these are the items included in balance sheet. Okay, so if we look at the cash book, we will realize that it's one of the asset. Okay, that's current asset. That's fine if it's current asset or non-current asset. We are not going to look into detail of each of them, but we have to know whether it's asset, liability, or a capital. Okay, also whether it's a revenue, expense, or not a profit. We will be calculating profit in income statement. All right, so this thing we know that it's a current asset, so we will be doing a balance brought down. So let's see which side is having more. Let's insert one more line over here. So let's total up the things. Okay, so this thing is less, so it's mean I will be having balance brought down. Okay, balance carried down, sorry, balance carried down at the end of the month, that will be 31st. Is it for 1 month? It's not for 1 month, so it will be 31st December. Okay, and here I will be having balance brought down. Okay, and the amount will be, I have to minus this amount from this amount, and that will be 7,000, 14,000. Okay, all right, so the reason I am having balance carried down here is because cash book is an asset and it's a balance sheet item. Okay, first thing. Second, we have capital. Capital is also a balance sheet item, therefore I will be also having balance carry down on the opposite side. I have to make sure both sides, credit side and debit side, is 20,000. So I will be writing 20,000 over here, 20,000 over here, 20,000 over here. Okay, so I will be having balance brought down also on, that will be on 1st of next month, 1st January of next year actually. So what year is it? It's 2020, so it will be 2021 in this case. Okay, and this will be also 20,000. Is it 20,000? All right, now seems better. Okay, Inventory is also asset, therefore I will be also having, I will be doing something similar. Okay, and here will be the total, that will be 5,000. Then I will have a balance carry down of 5,000. I will have the total of 5,000 over here, and then I will have the balance brought down of 5,000 on the debit side. Why debit side? Because it's an asset. Credit side for capital because it's capital, and it's if we look in this equation I mentioned earlier, capital is credit. Okay, so that's why it's having a balance on credit side. Then moving on with the rent paid expense, since it's an expense we will not have balance carried down, so this is something you need to focus, like really focus on. So why we are not having balance brought down here is because it's income statement item. Okay, so we will write here income statement, or sometimes we also do write income summary, that's fine. I mean, in this case we are having 1,000, I will write 1,000 here, that will go into income statement. Okay, and 1,000 over here and 1,000 over here. Okay, this 1,000 and this 1,000 is total. Okay, maybe here also I can highlight this is total, this one is also total, and this section is also total. Okay, in this case I will not be having balance carried down and brought down because it's an income statement item. I will directly post the total into income statement. Okay, let's look at purchase. In this case we have purchase, so let's total up the purchase section. Okay, that's 44,000. So in the purchase column here, okay, I mentioned earlier while I was doing the journal entries, I said we can have inventory, cost of goods sold column to record the inventory. Therefore, we will have the opening inventory and closing inventory like in a proper records. But in this case, we are not having it, and that's not fine if you are making income statement, but that's fine in the case you are just doing it for until ledger. Okay, but in this case if we are doing this, and we will have also income statement. Why? Because it's also an income statement item. We will see income statement purchase under the section, top section of the income statement, and in this case this is 44,000. Okay, so yes, this will be 31st December also, and oops, all right. So drawings is something similar to capital that we deduct from capital. Okay, sometimes we have capital here and we adjust the entries directly to capital account, but mostly what we do is we adjust them in the balance sheet. And if in the case if we are adjusting them in the balance sheet, it will be a balance brought down or carry down. Okay, carried forward also can carry down. And this will be total section, and this will be, let me make it brought down, and this will be 5,000. Okay, make things easier. All right, so sales is also an item from income statement, so I need to total this up first. I need to total the section, the credit section, that is 73,000. 73,000 will directly go into income statement. Why it will go in income statement is because it's an income statement item. Okay, the highlight, okay, let's highlight it. Also 31st December. Okay, I am keep forgetting the dates. Okay, you're supposed to write the dates here. I'm not writing it. I'm just trying to make the process faster. Okay, if you are having income statement, just reminding again, we are not going to have balance sheet. you can skip you can skip maybe a bit until I will cover do these all, okay, entries, and then maybe you can do it on your own, and then you can continue watching the video. So this will be balance brought down, balance carried on, okay. 31st December, motor vehicles 20,000, and again we will have 20,000 here, 20,000 over here, and also here. Why here? Because we need to write balance brought down here, balance brought down, and everything is good to go. Just highlight the section again because it's a total section, move it back. Other payables will also have balance brought down. Is it 20? Okay, in the case of trade payable, we need to add one section over here, one couple of columns and rows, and which side is greater? Of course this side is greater, and we need to add, how much do we need to add? Let me, okay, that will be 29,700, and that will end, am I right? Let's see. Yep, that's right. Why is it 10? Okay, so in this case it's, I'm not sure, it's 32,000, so I have to check back with the other transaction. Let's go here and see what do we have. Okay, I think the better way to check is with the journals. It's 32,000. Okay, so this I have to add one more zero over here, and yes, we are good to go. So I think it will be 50,000. This will be also 50,000. I have to add one column here before I do this. So let me add one column, and this will be 56,000, and this is going to be the same. So let's just copy and paste it. Let's highlight also, and this will be 6,000, 6,000, and 6,000. Come on. So this is balance carried down, and this will be balance brought down. Okay, just add one section, balance carried down. Oh, okay, this is not going to be balance carried down. I just saw this is sales return, therefore this will be income statement. Okay, this will be income statement, and these are the small mistakes usually we do make unintentionally. Okay, so if we see purchase return is also on debit side, and purchase sales return is also on debit side, and purchase return is also on debit side, it means something is wrong here. Okay, so sales is credit, and when it's returned it will be debit. Okay, and when purchase, for purchase, it is supposed to be on credit side. So it means I did it wrong in the video also. Just something to highlight, it's like a minor mistake, but it can mess up your income statement and trial balance. Okay, now we are good to go for the income statement, and all the items that's having income statement will be transferred into income statement, and all the items that are having balance brought down and carried down will be going into balance sheet. All right, so the format for the income statement is simple. All right, then we will have dollar sign here also, here also, two section. I'm not utilizing this column because the column is short and this is just for date. I think I can just make it bigger and go on. Okay, better. So this will be here, and now we have sales return. Okay, then we have total, then we have cost of goods sold. This is the format of income statement. You should know, you should memorize it maybe, because sometimes we will forget to classify few things, and this will help us to recall. Okay, here we are supposed to have opening inventory. In this case we don't have, but and then we will have closing inventory. All right, then we will have a gross profit over here. Okay, add other incomes, and less other expenses. So in this case our sales is 73,000. Okay, this is sales 73,000. So 73,000 will be here. No, it won't be here, it will be here, because we also have sales return. If we don't have sales return, then we can directly post it in this column. This is just for further calculation, and total the answer will be here. Okay, so this is minus 6,000, and that will give us 6,700 hopefully. This is heading, so I'm going to make it bold. We don't have opening inventory, we are going to keep it null. Our purchases are 44,000. Purchase return, purchase, this is purchase return 2,300 minus 2,300. We don't have closing inventory. Why we don't have closing inventory? Because we were not keeping the record of how much goods or how much units we have sold. Okay, as I mentioned here, cash, okay, bought one item for $7. This is the reason we should know how much items we have sold. Let's say we have bought 5,000 items and we have sold maybe 2,000, then we should record 2,000, okay, and multiply it with 7 to get the answer, and then we will record it as sold goods. Okay, that will be going under purchase column. Okay, so but in this case we did not do that. Same goes with this one. So we don't have closing inventory, we will just write it directly over here, keep it null. Moving on with this, it will be 41,700, I guess, and this is going to be, nope, nope, that's for some. I have to minus this, therefore I will use equal sign, this minus this. This is supposed to be 67,000. Okay, so we have the gross profit of 25,300. Do we have other incomes over here? So we will go from the beginning. Cash book is not an income, not an income. This is also not an income. Expense, we have one expense. And income sales, no, already recorded. Trade payable, purchase, we don't have any other income, we have only one expense, and that is in this case rent paid, and that is 1,000. Okay, we are going to record under the column of expense. I'm going to make it bold, all three bold, because these are headings. Rent paid will be 1,000. Since it's only one item, I can directly write it over here. Okay, and minus 8, this will be minus also. This is also supposed to be minus, but I did not classify that. Okay, so less, I am saying it's less, so it will be 24,300. Okay, so this is the profit of our of what we have done previously. This amount is the profit. Okay, so sales minus cost of goods sold, you will get gross profit. We will add if we have any other incomes over here, then we will deduct all the expenses from here minus from the gross profit, and then we will get the profit here. Okay, we also have, actually this is the profit before tax, and then we will have taxes over here, and then we will have the profit after deduct taxes. Okay, so that's all for this video, and hope you understood everything. Remember to make a trial balance and make sure it balances, and in next few videos we will be doing how to calculate depreciation and the disposal of non-current assets. And if you have any question, or if you have